ready to dive into the fascinating world of recycling. Today, we're taking a deep dive into Gravita India, a company that's not just turning trash into treasure, but also boasting some seriously impressive Q2 performance for FY25.
It's really interesting to see a company that's truly living the whole circular economy ethos. They don't just talk about sustainability, it's woven right into the fabric of their business.
Totally. And their latest investor presentation. It's a testament to that commitment. We're talking impressive growth, innovative strategies, the whole 9 yards. We're here to break it all down.
You can really see their strategic vision reflected in their numbers. It's quite remarkable. They're not just riding the wave of change in the recycling industry, they're actively shaping it.
So let's get right to the heart of it, those impressive numbers. Gravita is reporting some really solid year-over-year growth, kicking things off with an 8% increase in volume and a respectable 11% jump in revenue.
Those are some healthy figures for sure. And it gets even better. We're talking a significant 27% climb in EBITDA, and their profit after taxes, the PAT, is up by a healthy 24%.
Wow. They're definitely onto something. It's clear this isn't just about collecting recyclables, it's about smart operations and strategic management. What's the driving force behind these stellar results?
One word, expansion. They've got this ambitious strategy to become a global recycling powerhouse. They're aiming for a capacity exceeding 500,000 metric tons per year by FY27. And to get there, they're investing big time, a whopping 600 crore rupees earmarked just for capital expenditures.
Now that's putting your money where your mouth is. It speaks volumes about their confidence in the future of recycling. But where exactly is all this expansion happening? Are we talking massive new recycling plants popping up?
Well, maybe not mega plants in the literal sense, but they're strategically growing both their existing operations and branching out into new areas.
Makes sense. Diversification is key. So what areas are we talking about here?
Right now, they're already strong in lead, aluminum, plastic, and rubber recycling, but they're not stopping there. They've got their eyes set on lithium, steel, and paper recycling, too.
Now that's what I call thinking big. But it's not just what they're recycling. They're also going global, aren't they?
Absolutely. They've set their sights on Europe and have already signed an MOU to acquire a tire recycling company in Romania. They're clearly thinking big picture and strategically positioning themselves in a rapidly growing market.
It sounds like a solid strategy. But what's driving this global ambition? Why the big push now?
It's all about capitalizing on the changing landscape of the recycling industry. India is moving away from those informal, often unregulated recycling practices of the past and embracing a more formal, organized system.
So less backyard recycling, more structured and sustainable practices.
Exactly. We're talking stricter government regulations like the battery waste management rules and extended producer responsibility. These are channeling more and more scrap towards organized players like Gravita.
Talk about being in the right place at the right time. It's like they saw this shift coming and positioned themselves perfectly.
Absolutely. And this shift has another interesting side effect, greater access to domestic scrap. This means less reliance on imports, which are often subject to, well, price swings and logistical headaches.
It's a win-win, really. They secure a more stable supply chain and potentially give their margins a nice little boost. Now, that's smart business.
Right.
But it's not just about grabbing any scrap they can get their hands on. Their investor presentation really emphasizes value-added products. What exactly does that mean?
Think of it this way. They've moved beyond just basic recycling. They're creating a whole range of products. We're talking customized lead alloys, lead sheets and bricks, aluminum alloys. They're even producing food-grade recycled plastic granules.
Hold on. Food-grade plastics from scrap metal, that's next level. It really highlights their dedication to innovation and moving up that value chain. Speaking of impressive, they also mention a back-to-back hedging mechanism. Care to break that down for our listeners? Sounds a bit complicated.
Yeah, it's actually pretty clever when you get down to it. Imagine trying to navigate those commodity markets. They're all over the place. But Gravita's got this system where they essentially sell the metal equivalent of the scrap they buy on the same day they buy it. That way they lock in a fixed price.
So no matter how much those commodity prices decide to bounce around, they've got that safety net.
Exactly. They're taking a proactive approach, not leaving things up to chance. And to handle any remaining exposure, they use forward contracts. It all adds up to stable margins, even if prices go a little crazy.
Talk about covering all your bases. It's
Yeah.
impressive. But it's not all just about profits and clever financial moves. Gravita's got a big focus on sustainability, don't they?
Oh, absolutely. And they're not just paying lip service to it. They're walking the walk when it comes to ESG.
Yep.
Environment, social, governance, the whole package. Their investor presentation actually lays out a really comprehensive roadmap with some pretty ambitious sustainability targets.
Okay, so let's get specific. What kind of environmental targets are we talking about here? Are they simply aiming to reduce their environmental footprint, or are we talking real game-changing initiatives?
Think game-changing. By FY27, they're aiming for a 10% reduction in both energy and water intensity. And considering their focus on operational efficiency, it's ambitious, sure, but definitely achievable.
A 10% reduction across the board, that's impressive. But what about their actual energy sources? Are they still relying on traditional methods, or are they moving towards renewables?
Renewables are definitely on their radar. Their goal is to generate 30% of their power from renewable sources by FY27.
Yeah, that's what I like to hear. Incorporating sustainable practices right into the heart of their operations. It's not just environmentally responsible, it makes good business sense. But what about the S's in ESG, their social impact? What's their approach there?
Just as impressive, they've got all sorts of programs focused on employee well-being, community development, even things like advancing education in the areas where they operate.
So they're not just a company, they're being a responsible member of the community.
Wow.
I'm really liking their style.
They understand that a sustainable future isn't just about the environment, it's about social responsibility and doing business ethically. And speaking of global reach, their customer base is pretty impressive. Do you know who they're working with to provide all these recycled materials and innovative products?
Their investor presentation mentions a global clientele, something like over 32 countries. That's a diverse portfolio. What types of companies are we talking about here?
You name it, they're working with them. Automotive, construction, electronics, a whole range of industries. This broad customer base really speaks to their ability to adapt and meet specific needs. It's a definite strength in the global market.
It sounds like they're well positioned to weather economic ups and downs with such a diverse customer base. But let's dive into the nitty-gritty of their financials for a bit. Their investor presentation makes it clear that operational excellence is a major priority. I mean, they have a global presence with over 1,700 recycling plants.
And they're not just sitting idle. Their capacity utilization currently sits at a healthy 68%. Plus, around 47% of their revenue comes from those high-margin, value-added products we talked about earlier.
That's a clear sign of their commitment to innovation and moving up the value chain. And with a client list boasting over 350 companies worldwide, they're obviously doing something right. But when we talk about a growing company, debt is always a factor. What can you tell us about their financial leverage, their debt levels?
Well, they've always maintained a pretty healthy financial position. Their debt levels are very manageable. In fact, they have an A+ credit rating from ICRA. That says a lot about their financial stability.
That's definitely reassuring, particularly for potential investors. It shows they're responsible and well managed, which is crucial, especially in today's unpredictable market. But let's talk future prospects. What's their guidance for the coming years? Are they feeling optimistic?
Optimistic is an understatement. They've set some pretty ambitious growth targets, aiming for a 25% volume compound annual growth rate, CAGR, by FY28.
A 25% growth rate, that's going to turn some heads in the investment world. But for sustainable growth, those gains have to translate into profit. What are their profitability targets looking like?
They're shooting for a 35% AGR in profitability. This lines up perfectly with their focus on high-margin products and operational efficiency. It's a powerful combination.
Boosting both revenue and profitability, they're firing on all cylinders. So what's next for Gravita? What else is on their agenda?
Well, their long-term vision is really interesting. They're aiming to have value-added products make up a full 50% of their revenue.
Makes sense, right. Higher profit margins, why wouldn't they? It's not just about recycling more, it's about recycling smarter. But hold on, we can't forget those ambitious renewable energy targets. How do those fit into their plans?
Sustainability is a core part of their strategy. They're fully committed to getting 30% of their power from renewable sources by FY27. And long-term, we're talking net zero emissions by FY50.
Those are some seriously ambitious goals. It's clear they're not just dipping their toes in the sustainability pool, they're diving right in. But we've thrown a lot of numbers at our listeners today. What are some key ratios that can really help them grasp Gravita's financial performance?
One of the most important is ROCE, return on capital employed. Gravita's always maintained a healthy ROCE, and they're shooting for an impressive 25% by FY28.
Okay, for those of us who aren't financial experts, break that down. What does a 25% ROCE actually tell us?
Simply put, It means that for every 100 rupees they invest in their business, they're aiming for a 25 rupee return. It's all about how efficiently they're using their capital to generate profit.
So higher ROCE generally means a more profitable and efficient company. Makes sense. Any other financial indicators worth keeping an eye on?
Their EBITDA margins have been consistently strong, hovering around 9–10%, which shows they're managing costs well and staying profitable. And, they've also got an impressive track record, 13 years in a row of dividend payouts.
Now that's something investors love to hear. Consistent returns, always a good sign. But let's step back from the numbers for a second. How does Gravita stack up against the competition? The recycling industry is a pretty crowded space.
You're not wrong. It's competitive both in India and globally, but Gravita's carved out a really solid niche for themselves. A couple of things really make them stand out. First, they've got this incredible procurement network spanning across Asia, Africa, the Middle East, Europe, America. It's impressive. It gives them access to a really diverse and reliable supply of raw materials.
And access to those raw materials is crucial, especially in recycling, where sourcing can be, well, unpredictable. What else gives them an edge?
They really prioritize building those strong long-term relationships with their customers. Their network includes over 350 companies globally. This customer-centric approach has definitely been a winning formula for them. And, of course, their in-house recycling technology and expertise. They've successfully completed over 70 turnkey projects worldwide, really cementing their place as leaders in recycling innovation.
That kind of expertise is invaluable in an industry that's constantly evolving. New materials, new recycling challenges, they're not just keeping up, they're leading the way. But even with all these strengths, every company has its risks. What are some potential hurdles Gravita might face down the road?
Commodity prices, that's always a big one. They can be so volatile. Their hedging strategies definitely help minimize the risk, but those big price swings can still impact their bottom line. And then there's the competition, of course, particularly from players in that informal recycling sector. They often have lower costs because they're not held to the same environmental and regulatory standards.
It's a good reminder that ethical, responsible business practices, sometimes they come with a higher price tag. But something tells me Gravita is up for the challenge. They seem determined to prove that sustainability and profitability, they can go hand in hand.
I'm with you on that one. They've consistently shown they can adapt, innovate, and face those industry challenges head on. And it's all done with a long-term, sustainable approach. They're not just chasing profits, they're building a responsible business, one that's working towards a greener future.
Gravita India. Strong financials, big growth plans, a real dedication to sustainability, and they know how to outperform the competition. It's a company with a conscience, proving that doing good is good for business. So next time you toss something in that recycling bin, think of Gravita India. They're turning trash into treasure, paving the way for a greener future, and showing us all what's possible. This deep dive into Gravita India has been fascinating. They're a company to watch, that's for sure. Until next time, keep exploring, keep learning, and keep diving deep into the world around us.